Joining us now is Mark Zandi, chief economist at Moody Analytics. First of all, what is worse than a recession? I mean, obviously, some people would say a depression, but what do you think he's talking about? And is that the conversation that you're hearing among economists right now?
Well, yeah, I think what he's talking about is the loss of faith in the U.S. as a safe haven. You know, since Alexander Hamilton, we're money good. You know, if you come here, put your money here, you'll get your money back with interest, no questions asked. And I think that's now...
You posted Alexander Hamilton is rolling in his grave.
Oh, did you read that?
Yeah.
Oh, thank you very much. Yeah, so at least someone's reading it. Yeah, yeah.
But by that you meant there is a bigger picture, right?
Yeah, that's really a very important advantage we have as a nation, or historically we've had. When times are bad, when things are going off the rails, money comes pouring into the United States. It buys our treasury bonds and other assets, interest rates go down. That makes life a lot easier for us. But that doesn't feel like it's happening this go around. You know, capital isn't coming in, it's going away, and interest rates have risen. And, you know, there's a lot of moving parts here. There's a lot of things going on in the market. So, you know, I don't want to draw too strong a, conclusion here, but the evidence would suggest that investors, global investors, are beginning to question, how AAA is the United States. And if that's the case, then we're not going to get that flow of money coming in, and interest rates are going up, they're not going down, and that's not good for anybody. And I think that's kind of sort of what he was alluding to.
Yeah, and you and I were talking in the break about if you're lucky enough to have a portfolio. Well, I mean, for the average American, and some have a smaller portfolio, some have none at all, consumers are reacting to these changes in real time, right? Some people are, I don't want to say hoarding, but buying a lot of certain products. They're worried the prices are going to go up.
I bought a car in advance of the tariff.
Okay,
I was going to buy one like in 6-12 months, but I said, hey, because it's an imported car, I buy the same car. I'm very boring, same suit.
Same car.
Same car.
But some people are also saying, well, I'm going to put that off, right? Yeah. Because they're worried about prices going up or whatever. Stepping back, this confusion, how bad is it just from a consumer confidence standpoint, which is another part of the economy?
Yeah, I mean, that's why recession is such a significant threat, because at the end of the day, a recession is a loss of faith. Consumers lose faith that they're going to hold on to their job, and they pull back on their spending. Businesses lose faith that they're going to be able to sell what they produce. They cut back on jobs, and you get into this kind of self-reinforcement. And it feels like we're kind of right on the precipice of that, because if you look at sentiment surveys, of consumers, and there's been some surveys that have been done since the beginning of time, and they are like screaming that consumers, the collective psyche is ready to collapse here. Business survey, I run a survey that I've been doing weekly for 20 years, and it has literally just cratered. And of course, we're seeing what's going on with investor sentiment. So I think people are shell-shocked. They're really, on edge. But if these tariffs continue and actually are implemented and people see prices start to rise, that's when I think they go over the edge, and that's a recession.
So prices have been rising. I mean, we've seen inflation anyway. But at what point does it become something that economists and probably average Americans start to register this as something much more significant?
Well, this is going to register if, in fact, the president, follows through. We'll see, because it's on again, off again. We'll see what actually
hangs on to the China tariffs.
Yeah, we'll see what exactly happens here. But, assuming, take all the tariffs that have been announced and assume all of them will be implemented, that's going to raise the inflation rate by 2%. So instead of 2.5%, which is, kind of sort of okay, no one wouldn't be you wouldn't be talking to me if it was 2.5%. But if we go from 2.5% to 4.5%, people are going to feel that. That's going to really hurt, because their people's wages are rising 4%. So when it's 2.5% and you're at 4%, your real income is right, your standard of living is improving. But if you're, at 4% and inflation is 4.5%, your standard of living is declining. That's a big difference, in people's the way people perceive things and the reality of their financial situation. That's when it's going to get really bad for folks.
Mark Zandi, thanks for coming in. Much appreciated.
Yeah, thank you.